Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts, like the chart behind me, which is of GameStop, ticker symbol GME. So I'm going to be diving into the chart here, updating all the levels that I got on the chart, getting into some unusual whales data that might be pretty interesting. But before I do that, I did want to thank all of you who participated in this poll. I was about to do an open door video yesterday after I got up, then after I got home from work. But I was just kind of tired. Put out this poll, and yeah, so you guys voted for GameStop. I do think I will have an open door video later today, so make sure you stay tuned for that. But again, yeah, 11 people voted. Thank you for voting. And then also, I did want to point out, I don't know if you guys have beta access to GameStop Power Packs. I have been doing polls every week, doing videos on those. Super fun. And if you guys are a fan of baseball or basketball, they will be launching those cards on the platform soon. So that's pretty cool. And they do put out a lot of invites for beta access if you don't have access already. And I've actually made over $100 trading cards. I just pull them and then I basically tend to sell them right back. Yeah, it's a lot of fun, and I'm doing it every week, playing with house money right now. So having fun with that. Other fun stuff, I did want to bring this up, which is, the last YOLO update from Roaring Kitty. As we know, that was more than a year ago, from June 13th of 2024. And that is when he had the, share count of over 9 million with an average price of $23.41. So that is going to be important. When we look at the chart, we are lower than that. So, if this could be viewed as a floor, we are in kind of the discount zone. So while it might be tough to see price low, I do think that we're seeing some opportunities, some dip buying opportunities. And on that note, this is something that I saw last Sunday. And this is a Discord that I am thinking about launching kind of in coordination or linked to the membership on the YouTube channel. So if you guys are interested in this, it's really just going to be me sharing videos and doing updates to the videos that I make. But this is from last Sunday. So Jordy Visser, somebody who I've been made aware of through Anthony Pompliano. He's like an old school stock guy. Or maybe commodities. I'm not really sure, but he's highly focused on AI right now, and he does weekly videos on Sunday on his channel and also weekly chats that come out Saturdays. I'm looking forward to watching that this morning, and that is with Anthony Pompliano. But anyways, his video from last week, from last Sunday, he kind of mentioned that what he's seeing in the data, in the charts, across the market, is that whether it's GameStop specific or just kind of like meme stocks in general, he basically was saying that it looks like there's going to be a requel. So I think that we are seeing some dip buying opportunities with GameStop right now, because not only just looking at the chart, but also seeing other people see similar patterns, similar signals. And so, yeah, I think that we are looking at dip buying opportunities. But anyways, all of the videos, there are links in them in the description of the videos to the Discord, and also I will include a link to Jordy Visser's video here, as well as his chat with Anthony Pompliano that came out today on Saturday, November 8th. Probably should have mentioned that at the beginning of it, but anyways, coming back to this and that theme of Roaring Kitty, the possibility of a requel, and his price average at $23.41. So I am recording this Saturday, November 8th in the morning. The market's closed, and GameStop closed the week on Friday, November 7th at a price of $21.50. Dang it. Right at, that mark, which would have corresponded with expiration of contracts, options, whether that's, calls or puts, right there at that level. We will look at Max Payne in a minute. to see if we closed above or below. Spoiler alert though, we closed below. But yeah, looking at the chart here, some of the levels, some of them I can delete. One of those, because we have done, a full retracement, we are below this retracement that I have here. I'm going to delete that. One thing I also want to note is, I think this is really just like market psychology and what it tends to do to us, whether it's market makers, nefarious actors, or just, what we end up doing to ourselves by being human, having this psychology. We see this gap up here, this yellow line. And so that was at the close on June 11th, so about a year after, Roaring Kitty did his last update. We closed at a price of $28.55 and gap down. And so there's a gap there. We want to fill that gap. We nearly got up there on October 2nd. We hit a high of 28.10. So that's 45 cents lower than filling that gap. And then we pull back. Pretty massive, pretty disappointing, pretty discouraging, I must say. And so, I kind of view this as prices going up. People are like, oh, we're going to fill the gap. Once we fill that gap, we're going to launch. People get on board here. That's, creating bag holders or exit liquidity for people hoping that we get up to that gap and then it dumps. And it doesn't just dump down to, the 50-day simple moving average, which is at 24.16. It doesn't just dump down to the previous low over here from June 12th, which was at 21.54. It actually goes lower. It sweeps the lows. Anybody that had stop losses at that low, they got swept out of their positions, and everybody's feeling pretty bearish now. I think this is opportunity. Other things that I think are interesting before I get into, kind of that opportunity aspect is that, when we did pull back, we did break below that 50-day simple moving average. We bounced, retested it, got rejected. We opened above on October 27th, opening at a price of $24.50, but then closing at $23.53, coming down, about, really just like down, up actually 1% on that day, because we closed the previous day down here, gapped up, didn't fill the gap right away. Actually, sorry, no, we gapped up here. We didn't fill the gap right away. We came down, we closed here, and that ended up being 1% higher than the previous day's close. But then we did, since then bleed. Following that, pulling back to then sweep the lows here. So anyways, I think it's interesting that we did get a rejection there and that we are lower. And so with that being said, I'm just going to extend this channel. You can see that it is locked into place, and that is because I have it tied to two specific pivot points, and we can actually look at those just so you're aware of what I have up here on the charts. The first pivot point is going to be 24.84, which I would imagine was the low from June 12th, which was 24. Let's see the low. I think I might have been looking at the close. No, the low 24.54. Wait, no. What am I thinking? No, that's what am I seeing here in this? Yeah, so these are 24.84. Both of them are 24.84. Why is this? I don't really draw parallel channels too much, so I don't know what's going on with that. Let's see, sorry about fumbling with this, but yeah, why is that? So let's see, anyways, the high there was 20, no, we want to actually go to the high here. That was 24.84, so that makes sense. But then okay, those are the two lines at the top. I should have probably clicked the bottom, I don't know. Oh, price offset. 331. So I'm going to have to pull up the calculator for this. Sorry for that fumble. I got the calculator over here behind Ed. And so let's do 24.84, which is the high over here on July 22nd. And then from that, let's subtract 330. And then we get 21.54, which, sorry about that fumble there. Got the ball back. The low was 21.54. So that's how I draw that channel that is locked into place. And what I'm going to do is I'm just going to extend this forward into the future so we can kind of see, relative to, where we're at now. Let's just extend that to like 315, a little bit further into the future so we can see that we are dipping below it. I think, we don't have volume suggesting that, we're getting this pushed back up, but, it's not volume dumping and stuff. So we need to see some volume move to the upside. Maybe we see that next week. I think that's probably what's going to happen, but maybe I'm wrong. Maybe Max Payne suggests it's going to bleed more, and maybe I can extend this up a little bit higher to, let's say, the highs over here, and maybe we get the midpoint right around here. Maybe that's something interesting to look at. And let's just see here. I am going to adjust that to the high here, which was 21.10. And maybe I don't want to do it like that because I don't want to adjust. Let's just drag it up. So right around there. And yeah, so I mean, that midpoint kind of matches there. Midpoint matches, over here. It also kind of corresponds with this gap. So maybe I just want to bring this up to, what that gap fill would be. And, then maybe I don't need that yellow line there. So let's adjust this. 28.56, I want it to be 28.55. And then I guess I have to do the math on this. That's kind of annoying. But let's pull up the chart. The calculator, not the chart. The chart's already up. So we're going to do this to 28.55 minus, 702. And that's going to put us at 21.53, but that low was at 21.54, so I'm actually just going to adjust this to that. And so let's see, let's just double check the math in case I'm wrong. Let's see, 28.55 minus 701. There we go. So, okay. That is, that range that, I'm updating up here. Also, we don't got it less scrunched, less clutter. But we can see, kind of this 10% range here, 10% range up here. We came to within 10% of filling that gap, and we didn't fill it. And then now we've come back to below that range here, which that 10% level did act as support here, acted as support as well over here. So very interesting. I think that this is a very useful way to be looking at this. And just for fun, just to get kind of a measurement, if we do go back up to test the top of that and actually fill that gap, that will represent an over 30% move to the upside. So I think that, is potentially, looking pretty good there, with this being, like a dip buying opportunity. We do see the RSI over here approaching 30, so it's actually at 33.32, so sub 30 would be in the oversold territory. But very interesting. I'm just noticing this now. A lot of this stuff I haven't gone over during the video, so you're experiencing my process. Hopefully it's helpful for you in trying to understand the chart. And what I'm seeing here, based on this line, this horizontal line, that parallel channel, and actually I am just going to make sure that it is horizontal. We got those. Oh, it's not. There we go. Now it's horizontal, exactly horizontal. Okay, so looking at that, got this horizontal line. We clearly put in a low or a low. All right, so let's think about that. If we're putting in a lower low, what we would want to see in the RSI is a higher low. That would be bullish divergence. And so what are we seeing in the RSI? Over here, when we gapped down, RSI came down to, let's see, what was the lowest? 29.94. Yep, it was actually flat right here on these 2 days. So that would be Thursday, June 12th, and Friday, June 13th. Friday the 13th. So that's pretty spooky. I don't know if you guys are superstitious at all, but I think people are superstitious, so it doesn't matter if you are, it doesn't matter if I am. I just think it's interesting to point out. I have fun with numbers. Anyways, enough rambling. We got some bullish divergence here. So as long as the RSI is staying above 30, That's some very faint bullish divergence, so I think that's looking good. Where could it be going to the upside? Maybe this blue line there, that is, at 24.16, that's the 50-day simple moving average, could be, acting as some resistance up there. We also have this midpoint here, which is around 25 bucks. Psychologically, I think that's also a very important level. It has been pretty important in the past. And then, like the gap fill up to 28.55. Some other levels. Let's go back in time. I brought this up, so let's go back to June 13th of 2024 to mark Roaring Kitty's level on the chart. So let's see, that would have been after the big move here. There's also another level that I want to talk about associated with this big move here, and we can look at this on the bigger picture. We'll look at the current times and see how that relates. But yeah, June 13th, where is that? June 13th was a Thursday, and that is when Roaring Kitty shared, what his position was. So June 13th, I'm just going to put the line right there, and I am going to lock that into place so it doesn't move. And let's see, that was 23.41, I believe. Is that right? 23.41 and 35, rounding error. Let's round that down. And so that's right there. And I'm going to put some text here. Roaring Kitties. I'll do it like this. June 13th of 2024, YOLO update. And let's see how that looks. Does that look nice? Yeah, but let's see. What color do we want to make that? I think maybe, I'm going to leave it just yellow. I'm just going to do yellow. Okay, so we got that there. That's marked. That's when he updated us. So we've got that there. But I also wanted to talk about, Fibonacci retracement over here. So let's just do that. And that's going to be from the lows leading up to the big move here. And, I'll extend this forward in a minute so we can then see how it relates to where current price is. Or maybe we don't even really need to do that. Maybe it's just clutter. And but anyways, let's do this to the penny. So let's zoom in. Actually, I got to zoom in like this so we can see the to the penny. So the low over here, was that April 16th? I believe so. Yeah, the low on April 16th, it's behind me, but trust me, that's the date. The low was $9.95. So I am going to, let's see, $9.95 over here. And then let's do the market hours high from May 14th of 2024. That was $64.83. And that's $64.83. So let's adjust that a little bit. I'm going to lock that into place. And I might extend this to 315. So it's into the future. But let's just consider, this red line. It's right around 2169. It's got a 69 in there. That's pretty fun. But yeah, let's just fast forward. Let's do it, by clicking this button here that you can't see. It's behind me. That wasn't very exciting. But yeah, what's the level there? I don't know if you guys can see it. It's 2169. How did I know that? Because I've done this before. And it's got a 69 in there. It's easy to remember. It's a fun level. So I've got it memorized. But yeah, that's 2169. We're below it. This could be a dip buying opportunity. And if we look back at that red line, that has historically, every time we've gone below it, like following Roaring Kitty's announcement over here, his last YOLO update. I was going to say remove these levels, but I'll leave them up there. Why not? But yeah, following his update, when we did break below that level, from that level, we got a nice little rally. And if we do get a measurement from there, from that red line, let's say right when we broke below it, and then, however long it took, below it, those were dip buying opportunities because then we did go up to as high as about 56% to the upside. So even if you're getting your average down below that level, you would have hit higher than that as far as those gains go. And then if we do, look at this level, we retested it again. That following time we retested it. Spent less time down there. But that was a 64% move to the upside. And that was over the course of 62 calendar days, so about 2 months, just so we're putting time frame into perspective. Over here, when we finally or first got to that level, it took about about half a year, 158 calendar days before we, topped and then came back to retest it. So I think that's pretty interesting. Then over here, not as exciting. We tested it, more recently. And so that would have been on June 12th when we gapped down. And then, what kind of moves do we get to the upside? 28% or so. So not quite as exciting as it was in the past. But I mean, I think that's, we're at, this nice dip buying opportunity. So I did just want to point that out. And also, I'm thinking maybe I could do a bigger range, but I'm just going to leave it as is because I think I'm rambling enough about the chart. But one thing I do want to do, this is something that Colin has mentioned, that if you listen to anybody who talks about the macro or the bigger picture, and they're not looking at it on the log scale, unfollow them. So I have to say this is on the linear scale. So you can unfollow, you can unsubscribe. But if you do like this kind of content, please make sure you do follow and subscribe, whatever. I'm going to switch this over to the log scale just so we can see how that compares. And so I think that it's very important to consider that we could be seeing some more downside. And so good to be prepared for that. And so while looking at this on the log scale, this is the bigger picture that we want to be considering. From that low up to the high, we have the 618, so not the 786 in red, but the 618 at $20.36. So maybe we pull back and find that as support, 20.36. And actually considering, the moves that I was talking about from the lows here to the highs, if you would have bought at that, linear 786, the red line at 21.69, you could have actually gotten a better discount waiting for the log 618 at 20.36. And so from when that was tested over here and then going up to the highs, that represents a 70% move to the upside. And then doing that again, actually it didn't retest it over here. We put in higher lows and so maybe we do retest 20.36. Maybe we test 20. Maybe that's a dip buying opportunity, but good to be prepared for the possibility that we could come down to the log 786. That's around $15 here. It looks like at 14.86. So if we do start to pull back below 20, start to close, like let's say put a weekly close below 20, 2 weeks below 20, then I would be prepared for 15. Maybe we don't get to 15 or 1486 like we didn't get to the 618 over here. So I would just be prepared for 20 and just kind of have that mindset of the possibility of going lower and to be able to accumulate when shares are cheap. And we do have, let's see, I'm just trying to think, volume's just been really, really low. So that does make me think that it's probably going to bleed some more. And also, let's see, I'm just going to delete this. Actually, I'm not going to delete the retracement. I'm just going to remove some of the levels so we don't have as much clutter. And so the style, I'm just going to remove these upper levels. So we do have the 618, we do have the 786. But yeah, I really just kind of wanted to talk about these lows that we've tested over here in 2024. Did flip to support, although we it stayed support, although we broke below it, fake out, break below. But then now we are trading below. We did get rejected from it, so it did flip to resistance. And so that could be corresponding with a gap fill. So just, good to be prepared for that. What's possible, and this is not the best case, this is not, an optimistic scenario, Really, longer term, yes, of course, but shorter term, maybe we go up to fill that gap. Everybody gets excited, or actually, maybe here, let's have a little bit more fun with this. Maybe we come down a little bit lower, shake people out. We go below 20. Then we start to move higher, maybe get rejected from that 50 SMA, pull back, then come up to here to fill that gap. Everybody gets excited, and then, maybe, oh crap, no, I meant to, wait, I'm going to redraw that. Actually, maybe I'm not going to redraw it. I'll just do this. Maybe there's a possibility that we do then come down after that. I'm just going to move this over so it's not cluttering the arrow over there. But yeah, I mean, maybe then this comes down to, that 786. So that's something to consider, that's something that could be happening, because I do think that there's a lot of weakness, and that's going to be in the options data. I'll pull that up in just a second. I do want to switch this back over to linear just to kind of, excuse me, see how this compares. And yeah, that looks like kind of a bummer. Looking at it linear scale, I did want to see how this trend line compared though. Yeah, I mean, I think that this, looking at this on the log scale, I think makes that make a little bit more sense. So yeah, I'd look for a pullback to 2036, somewhere around there. And then if we do rally up to fill this gap, be prepared. Look, I'll, do an update. Request it if I don't. Because, I'm just busy or, whatever. But then I think that there might be some signs when we get up to here that it's showing weakness, and that we could then be seeing, a dump down to 15. Wouldn't it be great to get more shares at 15? But yeah, I'm just going to switch this back to linear, and we can see, that range that I've drawn there. And actually, let's just look at that range on the, oops, that's the volume on that. Yeah, so I mean, on the shorter time frame, log, linear, doesn't really make a difference. You still see that channel there. But when you're looking macro, when you're looking bigger picture, it is good to, if not only chart and log, also consider log, linear, see how they compare, because I think looking at this on the log scale does brace for that possibility of, prepares us for the possibility of coming lower. And so I think that we could be seeing 20. And with that being said, enough rambling about the chart. If you got through that whole ramble, let me know in the comments with a ramble on comment. And now we're going to talk about some options data. And here, looking at the max pain data. So for yesterday, Friday, November 7th, max pain was 2250, and we closed, after hours, 2163, but we closed at 2150. Marked right here, just above, or yep, right here, 2150. So that was, one whole dollar, 2 strikes below max pain. Max pain's at 2250. We closed below 22, and then below 2150. 2 strikes below max pain. So that doesn't look so good. And if we do look at the max pains moving forward, 22, maybe we could get up there. But then we see it at like 23, 22. Actually, this doesn't look as bad as I was thinking. I was thinking max pains were a lot higher than current price, which could really kind of like suppress price down, keep it down. But, I think that, just thinking, also taking a step back, thinking about market sentiment and what we saw in the markets, not just GameStop, but generally, let's just remove the drawing so we don't have clutter. I feel like what we had on November 7th was a potential bottom. We gapped down, filled the gap, not much volume on it, but it's not really a super widespread candle. And out of curiosity, let's just count the number of candles that we've seen since we got rejected from that 50-day SMA. So that's 1, 2, 10 candles coming down. Maybe we start to break out. I don't know, if that has any meaning, significance. But yeah, right there. And yeah, so I don't know. This is kind of telling me we might be lower for a little bit. I think that we could see some dip buying opportunities, some discounts, sub 20. So did just want to point that out. And now I am going to zoom out so we can look at, some of the data over here, kind of like the overview, the net call and put premium changes that we've seen. And so this is just showing data from November 7th. And what we saw was net put premium in red coming down. So that's good. When net put premium's negative, that means people are selling puts or selling cash secured puts or selling puts. They're no longer short. And so that's good. And so we see net put premium drop by $640,000 yesterday. So that's good potentially, but something maybe a little bit nefarious at the end of the day is actually in the net call premium, which more or less was flat kind of around the horizontal zero line there. But then at the end of the day, we saw some dumping. So over here, I'm not going to look at the specific contracts because it's not such a huge amount of money, but it is notable. We saw net call premium at around, 342, so about 20 minutes before the market closed. We saw net call premium up $286,000, but then we saw these dumps, and it ended at about $765,000 negative. So that's about $1 million drop in the last 15 minutes of the day. So that seems a little bit nefarious. I feel like, this is not what we want to be seeing. And that is with, the gap down yellow in price. That's what the yellow is. That's the price, stock price. We see gap down, go up, and then we actually, it looks like closed a little bit, lower than our high. We pulled back a little bit. These are just the daily candles, but we went up, pulled back, and but still, didn't really look that bad. Looked good yesterday, but this data makes me think it's a little bit concerning. If we go over to the past 30 days, this makes me think that we haven't really bottomed yet. Over here, we see net call premium in green going up by $11.2 million. People chasing the tops, apparently. I'm not really sure because the stock price went up there and then it came down. So, bag holders created there. Maybe I actually want to look at that contract. We'll look at that in a second because, I think that's kind of interesting. Is that still being held? What is the contract? But following the pullback in the stock price, we did see a dumping of calls, net call premium coming down by nearly $7 million, and that was on October 9th. The pump over here was on October 1st. Then we've seen it kind of flat. We saw a pump in the call premium over here on October 23rd, up $3.6 million. But then since then, it's been kind of flat. Net call and premium not really being too exceptional. We did see net put premium coming down pretty negative here by about almost $2 million, but then the day after it went up by about $2 million, so those kind of cancel out. We did see net call premium coming down a good amount on November 6th, so on Thursday, down by $2.7 million. But, one thing that's interesting about this, we saw net call premium going up a lot here, and that was the top. And then we see net call premium coming down a lot over here, or, relatively not a lot, but relative to more recently by a lot. So maybe that could be suggesting that a bottom is near. I think that we need to see some more signals in the call premium, net put premium, whatnot, and looking at contracts that might be suggesting some buying. But let's go back to October 1st to look at this specific day. So to do that, I'm just going to switch this back to one day. And then up here, if you're not familiar with unusual whales, this is, just trying to explain what I'm doing so you guys can learn what I'm doing. Let's go back to October 1st. And so we can see this big spike. And actually, it wasn't a straight up spike, but a good amount of buying there. And that on that day, October 1st, net call premium went up by $11.2 million. And so it wasn't, just like a gradual float up. It was kind of, at this time, go up, stay up. And so let's look at some of these contracts that would correspond with that. So let's see, October 1st, let's look at that. October 1st. I want to look at the time, right around noon. Right around noon on October 1st. We could see that net call premium was at around 3 million. Then it jumped up to around 4.8 million. So maybe we could look up some contracts there. So let's just go over here. And I'm actually just going to come back to the flow feed. I'm going to type in GameStop up here, and I'm going to adjust the date to be just October 1st, apply, and then I'm going to adjust that premium to be, let's see, that's $100,000. So let's go with that and see. No trades for that day. That's interesting. So let's do 10,000. Wait, no, that was million, I guess. This is 100,000. Now let's go 10,000. Okay, so we got some here. And so on October 1st, I wanted to see something around noon. I'm not seeing it. And so let's just come back to here. Yeah, that was around noon. So let's just decrease this maybe to 10,000. So that's 5,000. Not really seeing anything. It's kind of crazy. Let's just do 1,000. Around noon, what's going on? Maybe this is showing 25 or 250. No, it should be all of them. So let's see. Yeah, why is this not showing up? Let's just maybe delete that premium filter. So what's going on? Should be seeing stuff. Okay, so I don't know what's going on here. October 30th, we want to just look at calls. But yeah, I mean, it's not showing us that much data. 250 results. I am kind of confused by this because it should be showing more. Maybe there are some filters here that I'm not thinking about. Anyways, let's just look at some of the data over here. This is really, yeah, what's going on? October 1st, and let's see, $25 call. Yeah, what's going on? Let's adjust this back to October 1st. See a spike here? Yeah, I mean, I really want to specifically look at, you know, this. What's going on? Net call premium is jumping up. So that strikes me as a little bit odd. And yeah, why is it not showing up? Oh, this is what I want to look at. Sorry, this is a total ramble. But let me know if you enjoy the deep dives into unusual whales, if this is helpful for you. I was expecting this to be easier to see, easier to pop up. And so let's maybe not. Yeah, clear. Like, what? And so let's, this is for no. Let's just go back in time like this. There's no filters. Like, this is stupid. I don't know what's going on. Yeah, I'm sorry. This is, maybe I looked at this before. I'm not sure. And so, yeah, maybe I did look at this before. And so let's look at some of the contracts that I have in my, watch list. But that's super odd. I would have expected something to be there. It went up by, over $1 million. So contract lookup over here. These are my bookmarks. I'm just going to sort them by alphabetical. And we got some GameStop ones here. So let's actually, let's go back 45 days so we can see what was happening on like October 1st. And so, yeah, this is one of them that was bought on that day. And we can see that. Yeah, I'm not going to rabbit hole. GameStop, okay. So $25 call, January 16th is the expiration. And let's just scroll down here so we can see the data. What's going on here? Yeah, this is weird. Like, why can't I get data from October 1st? Like, because it was traded then. Like I just showed you guys that it was traded then. So that's super weird. Oh, it's probably the because of the warrants. The warrants screwed this up. That's why. That's why I imagine. So that's kind of annoying. But yeah, like the warrants must have been just, yeah, when were the GameStop warrants? Let's just go over to Grok. When were GameStop warrants? I don't know if I spelled that correctly. Released. October something, I imagine. Come on, you should be quicker than this, Grok. I don't know if I need an expert. Just I want a quick answer. November 8th. No. That's not correct. That's not correct. You sure about that? Okay, so let's come back to this and see what Grok has to say. But I think that that's probably what happened there. That they screwed that up, the warrants. And yeah, so what we can see is this basically started with, yeah, the open interest went down to 0 after that. So that's super weird. But now, what's open interest now? 18. So we're not really seeing anything too interesting with that. 30. This goes back further in time. Okay. No, I was off on the dates. Yeah, so October. Grok, you always got to, call out Grok when he's wrong. So the distribution was on October 7th, so that would have screwed up some contracts and stuff. And so this one, the $30 call for January, this one wasn't, like released after that or screwed up by it or whatever it is. And so let's see, October 1st, what do we want to see? There wasn't a lot of volume on that day for this contract. But I guess I should note that, yeah, I mean, open interest isn't very high for it. So let's see, the $50 strike call for January, that expires in January 2026. Let's see. This is like, option open interest values sometimes incorrectly disseminated. So yeah, there's some wonky stuff going on back here. But this is like 14,000 open interest, and then that kind of got reset. And so now we're at like 8,000. Yeah, so I'm not really seeing anything too interesting with unusual whales data, with options data. This stuff is all kind of wonky, I think, because of the warrants. So if I do, bring this back to the 7th, and then we just look back the past 30 days, I'm not seeing anything that really stands out. And yeah, I think there was something else I wanted to do with the chart here, but I forget. Yeah, so, I mean, we got Roaring Kitty's level here at 23.41. And, I mean, I would just brace for the possibility of going down to 20. And if we do get up to fill this gap, we'll need to follow up with the data, see what's going on there. But, yeah, I don't think I have much else to say about that. So this has been about 40 plus minute video. I apologize for my ramblings and stuff, but hopefully they were helpful. But, as always, those are just my thoughts. If you did find them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this, more coverage on GameStop. And also, I guess I should note that they do have earnings coming up on December 3rd. And, yeah, so we'll see. Maybe we get a move up to 29. Maybe we bleed some more. We'll have to see. Thank you so much for watching. Hopefully you're having a great weekend, and I'll see you guys in the next one. Take care. Bye.